It's time for the Jupiter Joe Money Show. I'm Jenny Thomas. We have Jupiter Joe, our host, retirement expert, financial advisor. Been doing it a long time.
That's right. That's right.
Today, so we normally talk a lot about income annuities and how to guarantee income for the rest of your life. And today's show is all about growth. Who doesn't want to grow their money? Number one.
A lot of people have growth and income annuities together.
Both.
Both. So today I thought it would be a good idea to talk about this 15% bonus annuity. In fact, I went on Brian Craig the other day talking about it because it's pretty important to put 15% in your pocket. Now you do have to hold the annuity disclosure over a 10-year period. However, that's not a big deal because we're going to talk about how to access money. The biggest concern with people is, how do I access my money? Well, you have 10% free withdrawal every 12 months. You can take your RMDs with no fee, no charge. Or you can take a lump sum of money as you need it, or you can annuitize the contract and get an income stream coming in. So there's several ways we can do it for you.
So when clients come in or new people who come in who've listened to the Jupiter Joe Money Show, when you ask them kind of what their goals are, do you need income? Do you want growth? The people who say, I think I want growth, but I'm not sure if I want growth.
Right. Well, it's a lot more detective work. I got to kind of find out, what are you going to do with the money? I had one gentleman, and he's 73 years of age. He came in last year. He said, look, I think the economy is going to continue to do well under the new president. I think that the market's going to do well, but I don't want the risk. And I put him in this specific annuity where he has upside potential but no downside risk. And that's why you buy an index annuity. You want the protection level where you can't lose any money. It's a sleep at night protection.
So how does that work compared to something like a brokerage account or a 401k?
Sure. So look, there's nothing wrong with being in the market. It's just that your money is at risk 100% of the time. With an annuity, your money's never at risk 100% of the time. So it's a big deal, to protect your money,
So for example, for our listeners, let's give an example. So if you had 100,000, you get a 15% bonus, which is 15,000
upfront.
So you're starting with 115,000, and it's in this index annuity for growth.
And what they do is they credit the bonus over a 10-year period. So you're getting 15% over a 10-year period. But it doesn't matter because, like I was explaining to Dana off mic, how if you average, let's say, 5% a year growth in this index, this is the way to look at this. You're getting 5% a year in the index, just for a number, over 10 years. That's a 50% return. Add 15% to it. That's 65% growth. That's 6.5% a year over 10 years. Every year you're earning 6.5%. Is your bank paying you 6.5% in your money?
We know no.
No. Even a gentleman came in today, he was talking about, his Fidelity account is averaging 3.2%. I have that Fidelity account for cash management, just for money going in and out. And I said, this is, if you average 6.5%, that's more than twice the going rate right out there, And by the way, you don't pay tax on it until you take it. It's tax deferred. So it's even more interest that you're earning on your interest by not taking the money out.
So are you earning money faster?
Yeah.
You're
growing. You're anything that's tax deferred, like your 401k, like your IRA, means you don't pay tax now. You pay tax later. Whenever you can do that, that means you're earning more money. You're earning money on the money you would have paid taxes on.
Right.
Triple compounding. So it's a big deal. I think what I want to talk about, I'm off mic. We were talking about this product, and we were talking about Will Rogers. Now this is some goofy old stuff, but it's interesting. Will Rogers, back in the day, was a big guy, this cowboy guy who did movies. You probably never even heard of him, right? No, but anyway, and probably nobody even listening heard of him. But one thing he said was, whenever he was making an investment, he used to say to people, "Don't tell me about the return on my money. Tell me about the return of my money." Because he would get a lot of, the old shysters, people who were trying to rip him off. And they would say, "Oh, you're going to earn 8% a year. You're going to earn 9% a year." But he would say, "That's fine. How do I get my money back?"
Right.
Okay. Well, how do I get the return on my money, my investment? If I put 100,000, I'm getting 8% a year. When and how do I get my money? If you are a listener right now, think about that. If you're investing in anything, I hear people all the time saying, my son's going to borrow money from us to buy a house. Now, I understand it's your son or your daughter or whatever, but when are you going to get that money back? You're probably never going to see it again, right? So to know, like REITs, I really don't like real estate investment trusts for this reason. You don't know when you're getting your money back, and you do not know how much money you're going to get back, but you might get 8% a year, So understand that the return of your money is laid out in an annuity. You know that at the end of 10 years, you get 100% of your money back plus every gain and all the interest that's accumulated without a fee, without a charge. If you surrender it early, you have a surrender charge. So we know going in how to get your money back, and we can discuss that with you. So the liquidity factor is there with these annuities. You just have to know how they work and whether you need the money. Some people come to my office and say, look, Joe, 10 years is fine. I don't need it. Now, other people come in, they say, we want only 5. So we'll do a single premium multi-year guarantee annuity where it's only, for 5 years or 3 years, right?
Yeah, exactly. Those are some of the more simple and similar to a CD, right?
Yep.
So when you let your money sit and you let it grow, you obviously want it to grow. And if you compare it to something like stocks and bonds or mutual funds, you have no idea. You're looking at it day to day.
Right.
Every morning you're waking up, you're seeing it red or green.
Yeah.
With a fixed index annuity, the growth you're kind of waiting from. What is it, a whole year?
It's year to year, right. So it's point to point. When you purchase it, let's say you purchase it June 1st. From this June 1st to next June 1st, that's when they come to you and tell you how much you earned. And you get a statement that tells you what the return was. And that money's locked in. So we were talking about house money. If you put in $100,000, you get a bonus of $15,000. You start out with $115,000. Let's say it grows just an extra $10,000 worth of interest. Now you're at $125,000. You could pull out 10%. $10,000 house money,
Yeah.
And you still have your investment and you still have money sitting there. So this is the benefit. The reason I did the show, I had a gentleman that was 73, came in last year, and his return was 10% last year. Now look, that's unusual and different. I will tell you that the average returns on these products over a 10-year period, if we look back, is 7% roughly. But that's without risk, right? Disclosure doesn't always, do 7%. It's going to do whatever the market does. The worst case scenario is you can have a 0. You can have a 0. If the market's down 20%, instead of getting minus 20 off your account, you get a 0. That is a big deal, right? But when the market's going up, you share in the market growth. You don't get the full growth. You get a percentage based on what the cap is or the percentage, the participation rate. A little complicated stuff. We explain how that works, and that does change, right? But with these kind of products, you're looking over a period of a 10-year period. You're looking for growth that's going to average a certain amount of interest,
right?
But without the risk. That's why you're buying it. It's still going to look. I can't tell you it's going to do better than your CDs or your checking account, but most likely it will. Depending from my experience of what I've done with these products, I usually see people over a 10-year period averaging, anywhere as low as 5% to as high as 7 or 8%, but I'm going to tell you it's probably going to average 6 or 7%, but without risk,
Yeah, if you don't want the risk, but you want the growth.
Yeah. I wrote down before we came on the show, I said, why do people do this? Okay. And number one is because they want to jumpstart their retirement numbers. It's putting a boost into your money. So let's say you have $100,000 sitting in a bank account and it's there for retirement. You get now your bonus. With the bonus of $15,000, you're at $115,000 plus whatever the growth is for the year, this year, next year, and year after. Future income. You can turn this into an income stream. Even though it's not an income annuity, it's an indexed deferred annuity. You can take income anytime you want after 1 year. Okay, it's for future growth. You're buying this for the growth means it's going up. You want it to go up. You want it to make money for you. Perfect for older annuities. Let's say you have an older annuity that's not doing well. Maybe I can't tell you how many people have told me recently their advisor's out of the business. He passed away. He's sick. I mean, I've had it all lately. This money could the bonus could offset costs from moving out of an older annuity that's not doing well. Not every annuity does well. Let's be honest here. There are some that maybe they didn't do well, or you don't like the product anymore. It doesn't fit your needs. It doesn't suit your needs anymore. You can get out of it, get a bonus with this, and it will offset any costs, or it will pay for extra fees that you may have. Let's say you're in a variable annuity. Those are notorious for fees. The fee here is 0. The way they make their money is on the caps and spreads and participation rate. If you have a 401k or an IRA and you're not doing well with it, or you're tired of the volatility like we were talking about, this 15% bonus can offset some losing numbers that you had there. Protect your money. If you have money at a bank account and you're worried about being sued, this is a great way to protect your money. That has asset protection annuities. Or maybe you just want to put some savings or checking money sitting there doing nothing to work for you. This is a great way to, I say it's supersizing your money. I mean, if you go from 100 grand to 115,000, you're going to earn interest on that money as well for the next, let's say, look, let me put my cards on the table. Let's say that you put 100,000 in. It's now 115,000 for the future. Now we get 3 zeros in a row for the year. Just 3 zeros. You average 5% a year for 3 years.
True.
Now, let's say, add another factor. Let's say you only earn 3% a year for 3 years. Now you're at 8% a year. You're probably doing better than the stock market,
Yeah.
And by the way, that 8% or 24% growth over 3 years is locked in. You're locking in the higher number. The highest number is locked in. This particular annuity, we didn't even talk about it, Jenny. It has something unique. You can basically invest your interest and get a better growth rate by investing your interest. That's what I did with that gentleman that was 73. I said, look, let 100% of your interest be at risk, but you're not risking your principal, but you have more growth potential. Okay. And so instead of doing 5%, you might do 8%. It supersizes even more your money. We know how this works, and it works well. All right.
Give Jupiter Joe a call, 561-743-0999. Ask Joe about the 15% bonus and what it can do for you. Go to jupiterjoe.com. You can book a free appointment either over the phone, or we can do an office appointment here in our office in Jupiter. And so today's topic is all about growth. It's about the 15% bonus and what that means for our listeners. And what do you think about you were talking about the variable annuities. If you have a variable, does that mean that the market, if it goes down -15, -10, are you losing your
money goes down
sometimes?
Yeah, your money goes down,
Really?
Unfortunately, yes. And that's the problem with a variable annuity. The fees are 3.5% to 4% a year. I file, I'm licensed to sell variable annuities. I've been licensed since the long time, right? Variable annuities. And we haven't done a variable annuity, since probably 2001 down here in Florida.
Wow.
Okay. We moved down here from North Carolina, New Jersey area back in 2001. And since then, we haven't done one variable annuity. The fees are too expensive. The volatility is you take all the risk on. Yes, they can do very well. Yes, I've seen variable annuities that maybe average 7 or 8 or 9 or 10% over years. But keep in mind, you're paying 3.5% or 4% a year for fees. These fees they're incorporated, the fees, in the payouts and the percentage, the participation rates. But you don't have to pay it out of your pocket, so to speak. But the reason people buy these growth index annuities is for the protection, number one. Number two, they want to have some type of growth without the risk. And this product definitely does it. Where do you get 15% on anything today?
Probably
about
not at your job either.
Yeah, ask yourself, is your bank going to give you 15%? Is Fidelity going to give you 15% bonus? No. Okay. Now, it comes with velvet handcuffs. They're tying your money up. They're tying your hands up where you can't touch all your money. Look, everybody wants an 8% return with 100% liquidity. Tell me where it exists, and I will put as much money as I have in it, because it's not available. Nobody has that. I tell people, this is the product, this is how it works. And they go, well, what if I want all my money back? You can't get it. Disclosure, it's a surrender charge. Just like every financial product, they have limitations and conditions. These have limitations and conditions. You can't earn only a certain amount of money. If you pull it out early, you have a surrender charge. If you work within the confines of the annuity contract, you can do very well, though. The benefits outweigh the negatives.
Right.
We've been doing this for a long, long time. Very rarely, I mean 1 out of 1,000 people might call and say, hey, I need my money back. Now, if it's an emergency like nursing home health care, chronic illness, or a death, those things usually have a waiver, which means you get all your money back. Then there's certain laws, like Florida laws protect you if you pass away. It tells, the state law says they must give you back what you put in, your principal, okay, your deposit principal, plus interest and growth, goes to who your beneficiary is. There's not a cost for dying. Okay, you hear this all the time. I'm going to lose my money if I die. No, that's not correct. I'm going to lose my money if I take income. No, that's not correct. It depends on the annuity you have. Okay, we explain this to you in black and white and show you what kind of contract you have. That's why when we deliver a contract to a client, an annuity contract, we highlight it in yellow. We show you all the important parts so you get it and you understand it. And you have 30 days by law. If you don't like it, give me, this doesn't happen to us because we explain everything. give me the contract back. We'll send it to the company. They'll give you back your money. Now, what other financial product does that? Tell me, please, because I don't know of one that gives your money back. If you put $1 million in the market and it goes down 50%, you think they're going to give you your money back in 20 days? No. I mean, come on. This is, the things that are out there sometimes I just don't understand. They just don't make any sense. If it doesn't make sense, like Judge Judy says, there's a reason it doesn't make sense, So...
Yeah, I remember a lady came in, I think it was last week, and she was saying that she lost like 20,000 in the market. She's sick and tired of just being the ups and downs, and she just was like, I just want something where I don't have to worry about it anymore.
Yeah. I have a client right now. We have a client right now who's lost $300,000 or $400,000 in the market.
Yeah.
Not everybody makes money in the market. For every winner, there's a loser. That's how the market works. Okay, you have somebody that's selling, you have somebody that's buying. Once you understand that the market goes up and down and it doesn't go like this, yes, the market can do extremely well for you. That's why I have some of my money in the market and some of my money not in the market, okay? You want a combination. You want diversification. You want me to get started on diversification? When I get on the topic, most people get it wrong. Diversification means that you have some money that can lose money and some money that cannot lose money. And you decide what gives you the pit stomach ache. If you get a stomach ache when you're investing with somebody, we had one lady in here not too long ago, and she said, I can't take it. I want out of this.
Yep.
And as soon as we got her out of it, she's like, oh, I feel so much better.
Yes.
I actually,
true story.
we actually, last year, the year before when the market was kind of crazy, I actually had clients come in my office, and I'd say to them when we were done, I'd say, how do you feel? And they go, I feel so good.
They tell me and Dana this.
Yeah. They're coming out of my office and they're talking to you guys saying, hey, we feel a lot better than we did. And I always say the same thing. If I could say one thing that people say, and this is not some line of BS, it's, I wish I did it sooner. It's like anything else, like going to the dentist. Look, the dentist is not my favorite place to go, right? I'm gonna be honest with people. But when I'm done with it, I feel like, I'm like Rocky. I'm ready to go, But anyway, look, here's the deal. 15% bonus on your money. And we have other annuities with larger bonuses and we have smaller bonuses. Everything has a condition and a limitation when you get a bonus. It's like years ago, you don't remember this because you're too young, but people that will listen to me about CD, certificate of deposits, or a savings and checking account. They used to give you a toaster oven when you'd open an account, or they give you, 2 movie tickets, whatever they gave you. It's an incentive. So is this bonus. And it comes with limits and conditions. They're giving you 15% in your money, and you can put $1 million in this without getting it approved. So that's $150,000. Now we have clients that have done this before. They put $1 million in and they get a $150,000 bonus. Okay. I don't know who else is doing it, like I said, So it's a great tool, financial tool, if you want growth, if you want safety, and you want to protect your money, and you want to pass assets. Let me tell you, let's talk about passing assets. This money goes to who you want it to, okay? Without any BS. You put the named people you want to get your money and the percentage, the dollar amount or the percentage you want, it's going to those people. Each person's getting a check. Tell me what other financial product does that in that simple terms. I don't know. I have limited, small arguments with some clients that just don't know these things. I go, how does that work? Oh, I never heard of that. Yeah, you never heard of it. I've never heard about a lot of things. Okay, it doesn't mean I don't know about it. I mean, I don't want to know. I don't need to know. You need to know about it if you're going to buy a financial product. I can tell you about any other financial product. They're very complicated. So are annuities. It's just the way it is, right?
But you're saying as long as you know the things you need to know, you'll probably be okay.
You'll probably be okay. Exactly. If you think when you go to the doctor's office and he says you're just going to have some minor surgery, it's minor surgery. Any surgery is major surgery. If it's on me, it's major surgery. Right? It may not. It may be minor to you. It's not minor to me. It's major to me. Any kind of surgery, right? So understand that everything's got a limitation and a condition. This is life in general.
What do you want to say to the listeners who are trying to retire? They're still working. They don't know when, the exact date they want to retire, but can they?
Yeah, that's a big question. And it's a great question because I get that all the time. Most people, right now, some people are being forced out of into retirement. They're being forced out of their job and they're forced into retirement. Some FP&L people right now, that's happening too. And I don't want them to get any bad information, but I think they need to really slow down and do not make this harsh decision about your pension plan. So I think a lot of people right now just have to really sit back, Think about what they want to do with their money. Think about if they want an income stream. If you're offered a big package because they don't want you working for them anymore, you've got to decide if it benefits you, number one. The other thing companies do all the time, I see this a lot, is the client will leave the company because they're forced out, and then the company hires them back as I guess it's what do they call that?
Contractor?
Yeah, contract, and then they pay them less, and now they don't have to pay them the benefits. So it's done for a reason. Or they can hire 2 people in your place for the income they were paying you. 2 younger people, right? So it's interesting, but I would just take back a step and think about what you really want to do with your money. It's so important to think about this stuff and not make harsh decisions. That's why we never push anybody. I had a gentleman in my office yesterday, and it wasn't a lot of money, but it was a lot of money to him. And I said, sir, why don't you go home, think about it, talk to your son. Whatever you want to do is fine with us. If you have somebody telling you need to make a decision today, don't make that decision today.
Yeah.
It's going away tomorrow. It's not going to be here. Okay, well, it's not right. It's not the right timing. It's not the right product. Like this bonus, I'll give you a quick story. I know I'm talking a lot, but this is interesting. I had a gentleman that came into my office probably 2 years ago, and he was going to retire, and he was going to move over a big amount of money, like $500,000. And he said, and I showed him the product. It was a big bonus like this. And there was a 20% bonus. And he said, well, I'm going to think about this. I said, okay, well, this product may not be there, just letting you know. And I said, think about it. Take your time, but think about it. But it may not be here. And the next thing you know, the product went away. And he called me and said, hey, how come the product went away?
I remember that.
Stuff happens. It doesn't, it's not available anymore. That's the way it goes,
Yeah. Well, I was just thinking about the sleeping on it part. We went shopping for Dana. Dana's getting married next year, and she went wedding dress shopping. We all went together. And Dana, she found a dress. I'm not sure. Maybe wants it, maybe doesn't. And then she slept on it, and then she's like, I hate that dress.
Right.
So it's like you really do have to think about it and not make quick decisions.
I find, I read that book a long time ago called The Millionaire Mindset, or whatever the name of the book was. It doesn't matter. And it was about how multimillionaires and people with a lot of money usually don't make harsh decisions or fast decisions about things that relate to money. They take their time and they go back home and they think about it. They're going to buy a car. They don't listen to the dealer going, hey, this is only $399 today. Tomorrow it's going to change. They don't listen to that crap. So making a decision and making the right decision is important. And I understand that. I get it because that's how I am.
Right, exactly. So what a good show. We're talking about growth, the 15% bonus. If you'd like to hear more about this and talk to Joe, give Joe a call, 561-743-0999. Book a free, no-cost appointment with Jupiter Joe. Go to jupiterjoe.com. Give us a call, 561-743-0999.
Thanks for listening, folks.
We'll see you next time on the Jupiter Joe Money Show.